Let's start with a number, 106,134. Now, this isn't just some random statistic. Think of it as a signal, a silent countdown on a system that is quietly bleeding out its most successful players right under our noses. This is the story of how it's all happening, and maybe why you were never supposed to notice. See, this isn't some dramatic collapse you see on the nightly news. No, this is happening in the quiet hum of offshore banks and in the hushed conversations of tax lawyers. It's a calculated, strategic repositioning of the country's entire economic engine. It's kind of like a ghost story, but one that's written in spreadsheets. Okay, so let's dive right into this. We're going to deconstruct what some people are calling the stealth wealth exodus. We're going to follow the money, try to uncover why this is happening, where it's all going, and most importantly, what it really means for Canada's economy. To really get what's going on, we have to first punch through the official story. The surface-level data that paints this rosy picture of stability and strength. This is Act 1, the fiscal illusion. It's the glitz that's hiding what's really going on underneath. Now, check this out, because this is where it gets really interesting. This slide seems to just completely blow up the whole brain drain story we hear so much about. In 2024, Toronto's tech talent grew by almost 6%. I mean, that absolutely crushes major U.S. hubs like New York. So on paper, you'd think we're winning the talent war, right? And it's not just about the people. The government's bank account? It looks fantastic. For the 2024-2025 fiscal year, federal corporate tax revenues were a shocking $12 billion higher than anyone projected. I mean, that has to be a sign of a booming economy, right? Well, not exactly. Because this is where you can start to see the crack in the foundation. Since 2014, investment in productive businesses, the things that create actual value like factories and technology, it's actually fallen by 13%. So where'd all that capital go? It got rerouted into real estate, which jumped 35%. We've basically been building an economy on housing, not on innovation. And that stability, turns out, it might just be the greatest illusion of all. So that brings us to Act 2. This is where the story starts to build, or pulling back the curtain on that fiscal illusion to show you the underlying pressures, the economic friction that is actively pushing our most successful people to look for the exits. So what's really causing all this? The crucial thing to understand is this combination of push factors. First off, you've got some of the highest marginal tax rates in the world, often topping 53%. Then, the capital gains inclusion rate got hiked up to 2/3. And bubbling under all of that is that housing-first model and a growing web of regulations that creates what sources are calling investor apprehension. For more and more people, the math just stops making sense. Now, you're probably thinking, well, leaving must be impossible because of this, the departure tax. It's basically a massive exit fee. When a high earner leaves Canada, the government essentially pretends they sold everything they own on their very last day, and then sends them a giant tax bill on all the gains. For years, this thing was like a set of golden handcuffs. But that's changing. And here is where things get really clever. In this brilliant act of financial jujitsu, what used to be a penalty is now a strategy. The smartest money out there is now choosing to pay the full departure tax. Why would they do that? Because the Canada-US tax treaty lets them step up their cost basis. By paying Canada now, they completely wipe their slate clean for the IRS. All the future growth on their assets, it gets taxed at lower US rates, permanently shielded from Canada. It's not a loophole, it's a feature of the system. And listen, this isn't just about the wealth that already exists. This is about the wealth of tomorrow. An astonishing 2/3 of our graduate researchers, the very people who are going to build the next generation of world-changing companies, they're already planning their exit. We're exporting our future tax base before it even gets a chance to form. And all of this brings us to the final act, the end game. This is where we see the ultimate consequences of these trends and the final kind of ironic twist in this whole story of capital flight, the void that gets left behind. And this right here is the powerful pull from all these other countries. This slide just lays it out so starkly. Look at this. Canada's 53% top income tax rate versus 0 in the UAE. Our 35% effective capital gains tax versus 0 in Dubai. Other countries aren't just letting this happen. They are actively rolling out the red carpet with golden visas and special tax deals. They're competing for this capital, and we're not. But here it is. This is probably the most profound irony in this entire story. This system is literally designed so that by leaving Canada, You can get a better financial position within Canada. Think about it. As a resident, your dividends get taxed at over 50%. But as a foreign investor living in the US, dividends from the exact same Canadian company are taxed at just 15%. Oh, and you also get legal protections under international trade treaties that you just don't have as a citizen. It's wild. This is the finer move. It's called circular capital. The exiles don't just leave and disappear. They pool their money in US companies and then invest it right back into Canadian assets. They become this sort of transnational Canadian elite. They own Canadian businesses, patents, and real estate, but without the Canadian tax burden. They get all of the reward with, well, none of the responsibility. So why does any of this complex financial maneuvering matter to the average person? Because sooner or later, the bill for this whole exodus, it comes due. Hey, remember that surprising $12 billion surge in corporate tax revenue from the beginning? The one that made everything look so good? Well, this is where that fiscal illusion completely shatters. That money isn't a sign of a healthy economy. Sources are calling it a terminal windfall. It's a one-time cash grab from businesses selling off their assets to pay that departure tax and leave for good. We are literally taxing the permanent disappearance of our own tax base. And that bill they're leaving behind? It doesn't just disappear into thin air. It gets passed on. It gets passed on to those of us who stay. Every single dollar of tax revenue that walks out that door is a dollar that has to be made up somewhere else, either through higher taxes on the rest of us or through cuts to the public services that we all rely on. Which leaves us with this one big final question. Right now, the largest intergenerational wealth transfer in Canadian history, $1 trillion, is getting underway. So is our current strategy designed to just tax one last piece of the wealth that was already created? Or is it designed to create an environment that will actually fund our future? The answer to that is going to define our economy for decades to come.